Good morning. Friday, March 28th. Zach Howard, here's your morning market update thoughts from my notebook to end the week. US CPI inflation hotter than expected. Stagflationary vibes continue here into Q2. Core PCE, personal consumption expenditures, month over month, zero point 0.4 versus a zero point 0.3 previous, along with core PCE index year over year, also an increase really is a key component in Q1 GDP. That higher number kind of sets the theme that this backdrop for stagflation, slowing growth, not recessionary growth, slowing growth from a rate of change, but inflation that continues higher as growth slows. That seems to be the signal that I'm continuing to monitor versus disinflation. As we look through that 2-year yield curve, it's falling off here on this data point today to end the week. Uh, Next up, gold. Similar set looking through gold and US yields. So gold and US yields falling really is a setup for stagflation. Gold loves that macro regime of stagflation. That's where it usually performs the best and is a leading indicator. And that continues to be the best performing asset out there on the board globally. 8.2% in the last month and 41.6 in the last year. And that's in US dollar terms for gold. All-time highs, every day, higher lows, higher highs, in a bullish trend. Beautiful. You look at other currencies, yen, Canadian dollar, a bunch of other toilet paper currencies, and gold is even higher and a more stronger trend. Gold is the real money out there and it always will be. Remember that. What is not gold often confuses gold, digital gold, Bitcoin. It is more commodity based on its volatility, whereas gold is like a currency. And it's failed that trend as it failed that trade as it tried to rally here this week. Up still 33% in a year and 5.7 in the last month, but it's not gold. And it has a much higher volatility. So you're taking extra risk for having higher exposure to that risk. Which leads me to the end of the week. People out there trying to run a portfolio, not a trading account or not a gambling account. Two different things. Are you a investor? You're buying companies based on the value of the assets and potential future cash flows long term into the future. Or you're a trader trying to take daily and weekly moves based on macro regime and some of this other information I'm talking about. Or are you a gambler, which just seems like what most of the majority of the Western society has embraced this gambling mentality, whether it's through sports betting, alt shit coins, meme stocks. The ultimate meme coin, meme stock is that car company. And people just love playing that casino each day. Yesterday had a crazy amount of buys on the Tesla 300 call strikes that expired today, 270,000 contracts. But here is a chart of the 2x Tesla Bull, TSLL. People that really want to play that gambling casino tap into this one. It had an incredible amount of shares traded yesterday, just off the charts. 200 and something million, 285 million shares. So like people are just only living once. You only live once, trade YOLO and whatever you want to call it, back from 2021. There's so many people still have that mentality out there, and this is not the market to be doing that in. If you don't know where you're at, VIX here above 20 today in the week. Look out. We have a further selling pressure in those bag seven names. Have a good week. See you Monday.